When people come over to my house, they often ask me, is this a forever home for you? I've never really bought into the forever home aspect thing. I think it's a great long-term home, a great spot for me and my family to be, but you never know what the future holds. And that's the exact same approach I take when it comes to investing. There are stocks out there that I consider to be forever stocks, forever dividend stocks, forever growth stocks, forever ETFs. But again, I have to reevaluate them because we never know what the future holds. However, in today's video, I'm going to try and do my best to give you one of my favorite forever dividend stocks that's out there today and in my portfolio. So before we begin, do me a huge favor and click that like button down below. Subscribe to the channel so you're notified anytime we drop new content, and let's jump into it. Hey everyone, Mark Rushin here, back for another video. As always, I'm a CPA and not a financial advisor, so please perform your own due diligence. And before we begin, let me take a quick moment to thank today's video sponsor, which is The Motley Fool. The Motley Fool has a ton of great resources and products available for investors of all different levels. And right now, if you go to fool.com/Mark, you could sign up to receive their 10 best stocks completely free to buy right now. Check out the link down in the description below. So when it comes to forever dividend stocks, or my favorite dividend stocks, there's a few things that I want to look for in that particular company. I want to see a strong business model. Do they have great products and services that are always continuously in demand? Do they have a strong management team that makes great decisions with their capital? And also, do they have consistently growing free cash flow? And I'm here to tell you that the company that we're going to look at today checks all of those boxes and more. So let's take a look at our company, which is Microsoft Corporation, stock ticker MSFT. As you know, Microsoft Corporation is one of the largest companies on the market today and one of the largest in the world. They currently have a market cap of $2.35 trillion, and year to date, shares are up a solid 32%. However, Microsoft isn't just outperforming this year. It has been a machine. Look at this 5-year chart here in which you can see how shares of Microsoft have outperformed the S&P 500 by a huge margin, up 177% compared to the S&P 500 being up 47% over that same 5-year period. The company has a huge vault of products and services, which is something that I love to see as an investor. When one segment is down, another can pick it up. Their Microsoft operating system and suite of Microsoft Office products for years were their legacy and most well-known products, such as Windows, Microsoft Word, Microsoft Excel, PowerPoint, and much more. But Microsoft is so much more than that these days, and they are led by their intelligent cloud segment. The company recently reported their quarterly earnings results, which also happened to be the end of their fiscal year end. EPS for the quarter came in at $2.69 per share. Analysts were looking for $2.55 per share, so a beat on EPS. Revenues came in at $56.19 billion during the quarter. Analysts were looking for $55.47, so a beat on both the top and bottom line for Microsoft in their Q4. For the entire year, the cloud segment generated revenues of $87.9 billion, which was a 17.2% increase year over year. In total, the company generated $211.9 billion and operating income of $88.5 billion, which equates to an operating margin of 42%. This is another thing that makes for a quality company. You can have great products and great services that generate tons of revenues, but if you're unable to generate great margins, that just makes your margin of error that much thinner. Although Microsoft has a slew of different offerings out there, from their operating system, as we saw, their suite of Microsoft Office products, they're also involved in gaming, AI, as well as cloud computing. And that is the main thing that investors are focusing on year in and year out, or quarter in and quarter out, is the growth or the slowing growth of their Azure cloud segment. After all, Microsoft is one of the largest cloud providers. And looking at this chart here, it will show you the year-over-year growth based on various segments of the business. Everything has been growing outside of Windows OEM. But as you can see on the first line, Azure has been slowing its growth for 5 straight quarters. Still growing at a sub 20% rate, which is hard to argue with, but when a company is as solid as Microsoft is, analysts are always looking for something to complain about. Cloud continues to be a major focus for Microsoft, but the other major focus for them is their continued leadership in artificial intelligence. And in the company's most recent earnings call, Satya Nadella, the CEO of Microsoft, alluded to the fact that the company will continually, gradually increase their spend when it comes to AI. And that happened to spook investors a little. AI continues to be a heavy focus for the company moving forward, but growth takes investment. If you have watched any of my prior videos or tuned in to one of my live shows on Thursday, the Dividend Power Hour, then you probably heard me say this phrase before. Free cash flow makes the dividend grow. Free cash flow is so imperative to a business. Free cash flow helps pay down debt, helps pay a dividend, it could buy back shares. Companies can also make acquisitions with free cash flow. Without free cash flow, you're unable to do any of that, and it's imperative to use towards the expanding AI capabilities. So here's a look at Microsoft's free cash flow dating back to June 2009, which is a 14-year period. And over that stretch, only 3 times has free cash flow not grown higher than the previous year. 2023 being one of those times, but that makes sense given how much demand from the pandemic years was pulled forward during those 2 prior years. Microsoft continues to find a way to be a free cash flow printing machine. Now, one thing that they're not as known for is a dividend. They have a dividend yield that is currently right at 1%, slightly below at 0.95%. But it's not because they haven't been increasing their dividend. In fact, Microsoft has increased their dividend for more than 20 consecutive years now, and they have a 5-year dividend growth rate of 10.1%. Just this past week, the board increased the Microsoft dividend another 10.3%, sticking to that 5-year average. So a lack of dividend growth isn't really the reason for the low yield. Again, at the beginning of this segment, we looked at a chart showing the 5-year growth of Microsoft shares, which are up over 177%. And as you may know, the dividend yield has an inverse relationship to price. So as price goes up, a dividend yield can come down. Okay, so we've talked about the company, we've looked at all their products, we looked at their latest earnings results and their full year earnings results. We took a closer look at free cash flow, the dividend, the yield, the growth in the dividend. Now let's take a look at valuation to determine is right now the right time to invest in shares of Microsoft. Looking at this fast graphs chart, analysts are looking for fiscal 2024 EPS of $10.95 per share next year, which equates to a forward price to earnings multiple of 28.9 times. Historically, shares have traded closer to 27 times over the past decade, suggesting shares are a little overvalued at current levels. I would tend to slightly agree with this, but at the same time, shares could provide for some faster earnings growth moving forward if their AI hopes come true. Another note to add when it comes to Microsoft, the company, is the fact that they are one of only 2 companies with a AAA rated credit rating, Johnson & Johnson being the other. That makes Johnson & Johnson and Microsoft are actually a safer investment than the US government. Looking here at this chart, over the next 12 months, analysts have an average 12-month price target of $392 per share on shares of Microsoft, which is implying nearly 25% upside from current levels. When it comes to Microsoft, they are one of the most well-run companies in the world. There's not a lot that you have to worry about going to bed knowing that you are invested in Microsoft. But some of the concerns around investors is when you have a company this size, how much more can they grow? And I think the answer is they can grow plenty more because they have so many levers in the fire. They have the AI capability for growth. They have still cloud growth opportunities. They have gaming growth opportunities, as well as their legacy with their operating Windows segment, as well as their suite of Microsoft Office products, which have really moved to a subscription-based model. So when it comes to Microsoft, I am an investor in Microsoft. I may not be adding at these particular levels right now, but I consider them a forever dividend stock and one of my favorite within my portfolio. So down in the comment section below, let me know what is your forever or favorite dividend stock in your portfolio. Hit that like button down below if you enjoyed the video. And with that being said, we'll see you in the next one. Take care.